Okay, hi traders, here's a new video. First of all, the risk warning: your invested capital might be at risk. Don't trade with money you cannot afford to lose, and this video is not investment advice. So this video is another binary option trading, binary option strategy video. Yes, we're going to show you those kind of trades which I have already done, because we have weekend, and on weekend, I'm a European trader and I do not have available the OTC market to show you live tradings. And so I will show you those kind of videos which I have done already, yes, and explain you what kind of pages of my ebook and what kind of concepts I applied there. So first of all, the ebook, you get this ebook, you find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, and binary option turbo trading concepts, market condition, trend identification, rejection, and candlestick math, and a lot of more concepts which can be applied to any kind of time frame, any kind of financial instrument, and any kind of broker. So I will not cover again what kind of concepts you should have or in your mind, yes, which you should memorize, which you should know inside out. I will do only a brief overview of those kind of concepts. That is, first of all, the concept about the Bollinger Band and the EMAs. That is this one here, Bollinger Band, here, constriction, Bollinger Squeeze, breakout. That are important, because depending on this kind of signs which the Bollinger Band is showing you, you can apply those concepts which I have explained in the ebook about trading. About the unfolding from candlestick patterns. Yes, because depending on the market condition, every candlestick pattern and every kind of chart pattern unfolds different. So, and then we have here the stuff about the EMAs, which are brought to the point, those kind of trades which you should do depending on the market condition. The same is here, you see, surfing of the trend, pullback trades, fake breakout trades, yes, at the ranging market, at the edges of the Bollinger Band. That concepts are all those kind of things, are those ones which I'm doing almost often when I'm trading. So important also this kind of stuff here about the entry point of the running candle, yes, because it's really important where you enter. Then this one here, again, also about the entry point, that you should try to enter above or below the previous candle closing price or opening price, or above or below the support and resistance level. Yes, that is not so important. Then this one here, which is telling you exactly what you should do before you do a trade. Yes, time frame analysis, trend analysis, market condition analysis, SNR analysis, chart pattern analysis, and this is explained in detail with live trading example in the video. Yes, so watch this video because it's important. Obviously, the candlestick candlestick psychology should be one of the part which you have covered, yes, because important you understand the relation, the ratio between the real body and the wick, and then also in context with the, not only with the ratio between the real body and the wick, also the context, yes, the ratio in between to the concept, or the relation between candlestick and context of the market. So that were those one which you should know inside out. Then those kind of stuff, what is again about the support and resistance level. You see here drawing support and resistance based on candlestick pattern, and then the change of polarity, support and resistance, supply and demand. That is also important. What is the minor support and resistance? What is a major support and resistance? That should be topics which you should have covered and which you have you should know inside out. Yes, that is what's important. So the rest is also the chart pattern, and from the concepts then are only important those one which I'm showing you here. That were the first one which I have done. First of all, the candlestick math. Obviously, candlestick math is a must-have. Yes, you have to understand candlestick math. The stuff about the rejection, the stuff about the market condition, the stuff about the EMA, what they are telling you in what kind of relations they are, and then obviously what it means, the major trend and the minor trend. Then the four keys, yes, the trend, the key level, the resistance, the key level, the candlestick pattern, and the rejection, yes, and then the fake breakout stuff, the reversal stuff, and the highest probability trading setups, which I have explained over and over again. So that were also those kind of concepts which you should have inside out. Yes, and now we are going to start immediately with the video which I have prepared, and if there is something what I should name, I will cover it. So we have here, so let me show you this. We have here, we're coming, you see, that is what I would say the nice part of a pullback. Yes, you see here the 50 EMA, the 20 EMA, twice pullback from the 50 EMA, and if you see only the 20 and the 50, what does this mean? That we have here below the 100, more below this, the 200, and what does this mean? We have here an uptrend. We are coming from an uptrend. We got here in some kind of ranging market, yes, and now there are two probabilities, yes. Or market is going down, yes, because we are coming from an uptrend, or market is going up, and because we see here nothing else than a double bottom, yes, here you have the first bottom, here the second retest of the 50 EMA, the probability that we are getting here into a double bottom trade, yes, or double bottom forming, yes, and then we are going up here, yes, it's much higher than we are going down, because we got already twice here a pullback from the 50 EMA with a combination of a fake breakout here in form of a morning star from the 20 EMA, and here again another morning star. Yes, we got here a morning star which was a fake breakout, and then we have here another morning star, and I have explained this in my live trading videos and in the last videos over and over again. The probability after a morning star or an evening star, yes, this is the morning star, that the next candle, this one, will be bullish on the morning star, yes, that is nearly 75 to 80%, so a high probability trading setup, yes. The same is valid here. After this morning star, the next candle, yes, after a pullback from the 50 EMA, the probability that this will be a trend continuation candle will be 75 to 80%, and that's the reason why I entered here into a trade. I cannot show you how I entered into this trade, because we have here in front of the video the introduction to the ebook, and I don't want to show you this again. So, and the same is valid here. You can watch it on your charts. You get any chart, and you see here evening star, next candle, 70 to 80%, yes, if you get a pullback from any key level. The same is here, pullback from any key level, here the two variation Bollinger Band, next candle is a put, yes. Also, if this will be not a red candle, but this is what I have explained, try always to enter above or below the previous candle closing price. Here in this case above the previous candle closing price, here it would be below the closing price, because you go into a call, and that is what I have done here. Yes, that is what I have done. I entered here below the closing price. Price was pushed down, I entered into this trade, and then on the expiration time, price moved in the right direction, like I have explained in the ebook. So, okay, let's start this video, and as soon there will happen something and I enter in some other trade, I will stop the video again, and to see price is moving up. It will be maybe, yes, it was not a bullish candle. It was not a bullish candle. You see how important the closing price is, yes, or the entry point is. It was important that you got a good entry point, but I believed still into a call. This bearish candle was formed only because of this kind of consolidation area, constriction, what I have explained also in the ebook, when you remember those things which I have shown you about the EMAs. And I entered again into a call, because this candle here was only a retracement of this upcoming uptrend. Yes, and because the probability, because the price gone below this level at this support level, I entered at this level, because it was clear to me that price will go up further. So, and yes, and that is exactly what I have shown you in the ebook, where I talked about the running candlestick. Yes, how to predict the or how to understand the running candlestick. And you see here again, really close one, but I entered again because this is nothing else, yes, and those two candles together are giving you the same candle like this one, this indecision candle with a slightly upwards touch. And because of this, I entered here again into a call, because I understood that price will continue. That is the same thing if you have here, like here, you have here an evening star, get a doji, but you know exactly the trend will continue because we got here a reversal from two deviation Bollinger Band. Yes, that is what this is should be. Yes, and this kind of consolidation area at the key level is also here. Yes, and you have this also here, and so you get the same here because we got here this constriction of the consolidation area of this Bollinger Band. Yes, and so I understand immediately that price will go up further. So now we got here also this kind of mini double bottom. Yes, in a bigger double bottom. Yes, so you get this one, and you see also another morning star. And what should you do here? You wait till price goes down to this level here, and on the rejection you enter, or also below, it's a little bit below the 20 EMA, you enter into a call, because the probability that the next candle will be a bullish one, or yes, a bullish one, is 75 to 80%, and that is what you should do here. I didn't have done this, yes, because I stopped the video after this, but this is how you should trade them, because we got here double bottom, a morning star, yes, and we are here still into an uptrend. But before you enter, not entering here, you should enter after this candle runs down to this level, and on the rejection above, yes, or at this key level, you could enter immediately into a call without any kind of rejection, because you should understand that we are already now into an uptrend, yes, and because the entry point here below this level would be the best choice. So okay, that was it. Study those things which I have explained in my ebook, which I named also in this kind of ebook, in this kind of video. And so I would say, if you like this video, do a like always. If you didn't subscribe, subscribe to my channel. Don't forget to subscribe. And if you have something to say, drop me a line in the comment section. I try at the moment to cover all the comments which I have in the comment section, but it's a little bit difficult at the moment because I have the mentorship application program running, which is really time intensive, and then I have to do the videos, and then I have to comment it. It's a little bit a lot, so be patient. I will answer your questions or those things which you have commented where you drop the line in the comment section, but I need some time. So I would say it was it. So I would say stay safe and bye bye.